inflation. Headline CPI inflation remained low in November and December, even as it firmed up by 1 percentage point in these 2 months. This increase was largely driven by the lower rate of deflation in the food group. Excluding gold, core inflation remained stable at 2.6% in December. Near-term outlook suggests that food supply prospects remain bright on the back of healthy Kharif production, sufficient buffer stocks of food grains, favorable Rabi sowing, and adequate reservoir levels. Core inflation, barring potential volatility induced by prices of precious metals, is expected to be range-bound. Geopolitical uncertainty, coupled with volatility in energy prices and adverse weather events, pose upside risks to inflation. In terms of the headline inflation trajectory, despite the anticipated momentum being muted, unfavorable base effects stemming from large decline in prices observed during Q4 of last year, that is 2024-25, would lead to an uptick in year-on-year inflation in Q4 this year. Considering all these factors, CPI inflation for this year, the current year 2025-26, is now projected at 2.1%, with Q4 at 3.2%. CPI inflation for Q1 and Q2 next year are projected at 4% and 4.2% respectively. Excluding precious metals, the underlying inflation pressures remain muted. The risks are evenly balanced. Again, in view of the impending release of the new CPI series on February 12, as I mentioned for growth, we will be presenting our CPI inflation projections for the full year 2026-27 in our next policy statement in April.